Good morning and welcome everyone. I'm Tom Bowley, Chief Market Strategist at earningsbeats.com, and this is Trading Places Live. It is Thursday, March 26th, 2020. We are pre-recording this Trading Places Live. Currently, futures are pointing to a slightly lower open after an afternoon sell-off, but we do know how things can change very quickly in this environment. So there's really no telling where we might end the day, but we'll look at some key levels across various indices. Things maybe to be watching depending on which direction we go today. Let's talk a little bit about what we're going to talk about. We will start off with, of course, the daily market recap, get into talking technically. I'm going to pull up the S&P 500. I know from a Fibonacci standpoint, we looked at that here in the last, we've been looking at that quite a bit here over the past couple of weeks, but it seems as though we at least have a bottom or printed a pretty significant bottom for a Fibonacci bounce. So we'll update that, take a look at that. Also look at a few of the sectors that have been the strongest over the last month and take a look at their bounces and see where we stand there. And then we'll actually get into a different segment where we concentrate more on Fibonacci, but instead of looking at the U.S. stocks and U.S. indices, I thought maybe we'd look at some of the global ETFs. So areas like South Korea and Italy, where we've been hit so hard, just to see what kind of bounces we're getting there. Don't know if the U.S. will follow suit, but we'll take a look and just compare and see where we are in that cycle. Then we'll get into the earnings spotlight. We do have a few companies that are reporting, even though this is not the time of the quarter where we see many reports. There are a few. So we'll pull those up, go through a few upgrades and downgrades, and then we will wrap up the show with the three you must see. So let's jump into the daily market recap and see what's taken place. First, you can see the Dow Jones did finish up 500 points. So on the surface, that looked really good. The one thing I would say is that we were up probably 1,300 points in the final hour. So there was a lot of selling that took place at the end of the day, and I don't like to see that. But I would think that we'd still have a little bit more room to the upside. So today will be very interesting to see whether or not we can continue the upside momentum that we've had the last 2 days. I'd be watching the 20-day moving average on the various indices. I think that, along with key Fibonacci levels, and maybe some key gap areas, although we've got a lot of those on the chart. The combination of those three would be kind of maybe dictating a little bit to me which area might be key in terms of trying to get through, or maybe if you're shorting, looking for a possible reversal. The S&P 500 up 28, but again, way off the earlier high. We did come back down below the 2,500 level at the close. NASDAQ, probably even a bigger reversal. We were up, 2.5% with probably 45 minutes, 30 minutes to go in the trading day, and ended up losing 0.5% on the day. So it was a pretty big reversal on the NASDAQ. We did finish down 33 points. You can see mid caps up 3%, small caps up just a little under 1%, but they too struggled into the final hour. Industrials, energy, real estate, financials, utilities, those were your five leaders yesterday. All five trading below the 20-day moving average, and also all five selling off from their earlier high. Although you can see industrials did still finish with a very strong 5.25% rally. Energy up another 4.75%. And that's been an area that really needed. I mean, we've obviously all of the market has needed a bounce, but energy was already in trouble before all of this hit. And so we are seeing a pretty nice bounce there where we've gotten back up to about the 30 level before a little bit of selling late in the afternoon. Okay, let's keep moving on. 10-year Treasury yield. One thing that we've got today that's going to be very interesting, and it'll be coming out shortly. Of course, this show will be shown after the report comes out, but it hasn't come out yet, and that is the initial jobless claims. And the numbers I have seen have been all over the place. We were holding steady for quite a while between 200,000, 225,000. Last week, we spiked to 280,000. This week, I saw estimates from 750,000 to 2.75 million. And I've actually heard some say 3-4 million. I don't know what the number is going to be, but it's going to be very big. And just to give you a little bit of a comparison, back in 2008, I think the high was somewhere around 750,000. throughout the entire period. So you're looking at a lot of people filing for unemployment. And of course, you know, the government is dealing with that. We've got a $2 trillion stimulus package going back to the House. So there are things to combat that economically. I still believe the biggest unknown for the market does not like unknowns. The biggest unknown is how deep this pandemic gets. You know, there's some other issues, I think, later in the year. If we can kind of slow it down now, you know, does it come back? Does it cycle back through later in the year? That's going to be a panic or fear for another day. Right now, I think the market wants to see that this is under control and that cases start to slow down. You know, looking at the history that we've seen in other countries and the measures that they've taken, I would say that most experts would agree we're probably at least a couple weeks out from that here in the U.S. So how's the market going to deal with this on a day-to-day basis? It seems, you know, lately we seem to be waking up. Futures aren't that bad, but will that continue? I don't know. As far as the yield goes here on the 10-year Treasury, you can see, and I put a Fibonacci on here, dating back to about the middle of February when we were up around 1.65%, dropped all the way back to below 0.5%, and then marked these different levels. And you can see the first time we got up to the 38.2, we struggled, pulled back, and then we made a run and actually got just above that key 61.8% level and then fell back. So I would be watching this high, which is just above 1.25%. And then I put a range in here because as we've made these moves up, we've now seen 3 separate moves lower, reaction lows, come back down into the 0.65 to 0.75% range. So that's going to be really important to watch to see if we hold that, because if we don't, that's going to tell me that there's more and more money rotating back into treasuries, getting fearful, and that could spell trouble for equity. So I would really be watching this. This is just, you know, none of these signs are the sign. It's really putting a puzzle together. But this is one of those pieces of the puzzle that I'd be watching pretty closely, because we know what happens when the money starts rotating big time into treasuries. That's money that doesn't go into equities, and that could certainly lead to another rollover in the equity market. So let's watch that. Let's go ahead and move on. I want to talk a little bit in talking technically about the S&P 500. This is a chart I think I showed, I don't know if it was yesterday over at Earnings Beats or back on Tuesday here at StockCharts TV, but it's one that I've been following pretty closely. And this is just simply the Fibonacci retracement level after the big drop that we saw. So all the way back in, I don't know, February 21st, 22nd, when we put the top in and we started this big decline, you know, and I've been, you know, looking at different bottoms thinking, okay, maybe this was the bottom. There's your Fibonacci bounce. But then we'd go to a new low and okay, we got a bounce, and then a new low, and then we got a bounce, and then a new low. And so we haven't sustained anything to the upside really throughout this entire rally to establish a base. And when I talk about establishing a base, it's nice to see at least a move back up on the Fibonacci retracement tool here, back to that 38.2% level at a minimum. So I've drawn in this red shaded area, which is anywhere from about 2650 on the S&P 500 up to maybe 2800. That would be what I would consider a normal Fibonacci retracement bounce after such a steep decline. We did it in 2008. We did it in 1987. Both of those big declines, which in our history, or at least in our recent history, and I'm going back the last 40 years or so, those were really the only 2 periods that I would compare to what we're seeing in terms of panic and in terms of the acceleration of the decline that we have seen in 2020. 2008, 1987 is it. Both of those instances, when we set a bottom, we got back up into the 38.2% area. And one of them, I think it was in 2008, we may have had that initial intraday move up to 50%, and we couldn't hold it. Now, yesterday we backed off, but I would expect that that's not the end of the rally. Now, I'm not a big proponent of going long, and really when the VIX gets above 20, as I've said in the past, I tend to stay away from the stock market. I trade a little bit, but I like to stay in cash. I just don't like trading a volatile market because you don't know what you're going to wake up to. Just like yesterday, you got this huge rally, and literally in the last 30, 45 minutes, the carpet gets pulled out from under you. You just don't know what you have in the market from not even day to day. It's really hour to hour and sometimes minute to minute. And so as a result of that, it's just very difficult to commit, at least for me, because I know what happens to me emotionally when I've got a lot of money at work and it starts going against me. Probably like just about everybody else, I make irrational decisions with my trading. So knowing that, I just tend to try to stay out. If I have small positions, it's much easier to control my emotions than if I have larger positions. So again, for me, it's about really hunkering down during these highly volatile periods and trying to conserve my trading capital. Okay, how about we look at a couple of others? How about the XLK? You can see the XLK after moving up from moving down, excuse me, from 102.5 all the way down to 68 or so. We have bounced, and we did hit the 20-day moving average yesterday. So this move on the XLK from down below 70, we got up over 80. That's a pretty good bounce on technology. Now, I'll go into Fibonacci in just a couple of minutes. I want to talk a little bit more about that. But as far as right here on this chart, if we drew this in, and I'll make that a little bit darker here. All right, so if we take the top, or right about the top, come down to the bottom here. I mean, you can see that basically that 20-day moving average was right at the 38.2% Fibonacci retracement. So we got the move down, we bounced, we put in that initial move. Technology is telling me, maybe this is it for technology. Maybe we did hit the high yesterday. But if the overall market bounces, perhaps we get up into that 38.2 to 50% zone. My point is right now, based on history, we tend to not have V bottoms. The reason for this decline that we've had for the last month could potentially be like a V bottom. I mean, it's a virus that comes and goes. I think most of us realize a year from now, we're probably not going to be dealing with this virus. So we know that there's a limited amount of time, but what we don't know is the damage that it's going to cause. And if we don't know the economic damage, and the fear is still out there, and it's a healthcare crisis too. It's not just financial. And so all of that, I think, Bill, just it's unlike anything we've seen. So trying to say, okay, it's going to act like this, back in this period, I think that's very difficult. But I would say this: 38.2 to 50% is what I'm looking for the most part for bounces. And according to this chart, the XLK potentially could have hit that yesterday at the high. A couple of other sectors that have been stronger lately. The XLV, you can see the big move down. We are bouncing here. About $10, $10 or $11 on this bounce. You can see there's still room up to the 20-day. And then the XLC, Communication Services, has done pretty well. Now, we didn't get as much of a bounce, but in the middle of March, we actually stopped going down while some of the other indices kept going lower. So what we were seeing was money rotating from some of the other areas into communication services. So my guess is, my guess is this one holds up better on a relative basis as we move forward. But I think a lot of the rebound, if you look at some of the bigger, higher percentage moves, a lot of the rebound the last couple of days have been in areas that have been hit really hard. So you could look at something like energy, which was down at 22, hit 30 yesterday. So that's almost a 33% move back to the upside, pretty close to it. That's a nice rally in a very short period of time. So that's just some of the things that we can be looking at from a sector perspective. I would expect that some of the groups that have been leading us for the last month are probably those that are going to lead us on a relative basis if we drop to the downside again. So if I'm trading on the long side, these were this is just the relative strength of the various sectors versus the S&P 500, their percentage change versus the S&P over the last month. So it doesn't mean technology's gone up 6%. It means it's outperformed the S&P by 6%. So the S&P's gone down a lot. Technology's gone down a lot. It just hasn't gone down as much. So just to interpret these percentages. But technology, healthcare, consumer staples, and communication services, these are probably the four areas that I would concentrate on the most, looking for some of the best performers in those areas. Okay, Fibonacci levels. I want to move on and talk about some of the areas of the world. We talk a lot about the US here on the show, but obviously the same issues are impacting global markets. So what's going on around the globe? First is South Korea. And I'm pulling up South Korea, probably the one that you might think is China to pull up. But all my work with the US versus China, the correlation between our country and their country has just not been there. Not like many of the other areas around the world. It's probably one of the least positively correlated. So I tend to not pay a lot of attention to what's going on the China market because I haven't found the usefulness in any correlation, positive correlation to what might happen or what is happening in the US. So I'm going to focus on some other areas, some other countries. South Korea, I guess the first question, if I annotate this, is where to draw the Fibonacci retracement line. Do you start all the way back in middle of February here? It was just kind of slowly moving, and then we had this big drop. So I'm going to start here. And once again, there we go. So let's take a look at this. And you can see in South Korea, we are up into that 38.2 to 50% range. Now, if you say, hey, let's go back all the way to the other high to there, then we're still a little shy. So it's up to interpretation, which high you draw the Fibonacci from, which high to low. It's open to interpretation. I like to draw when we really start to get a more definitive and accelerating move to the downside. So this is my preference. And I would be looking, you got gap resistance up here. I think 48 to 50 on the EWI would be an area to watch very closely. To the downside, if we go back down below that 20 period moving average here, this is an hourly chart, so that would be the 20 hour, then I would become more fearful that we're rolling over. All right, next up, EWI, Italy. So what's going on over in Italy? Now, this one has been a big drop since about the same time that we started in the US. So let's pull this one up. And if we go down to the low, you will see that Italy has not bounced back to that 38.2%. Now, there's a lot of different macroeconomics that take place here. It's not just the virus and the reaction to the virus. Every country is going to be different. But I think it is still useful to take a look to see some of these other countries where they've bounced and whether or not the bounce is still in play. And at this point, I would say the bounce is still in play in Italy. We'll see whether or not we can get up to that 38.2%. But clearly, on a relative basis, Italy has been struggling. Another thing to watch, too, is accumulation distribution. Now, this is an hourly chart. I prefer to look at this on a daily chart. But still, even on an hourly chart, you can see with the EWI moving up, we're getting very little movement to the upside in the accumulation distribution. And one other one, I want to go ahead and pull up Germany, because Germany to me is the one that is, in most of my studies, this is the one that's most closely correlated to the US. And so, looking to see what's going on in Germany, I think is maybe gives us a little bit more of a clue. And once again, where do you start from? I'm going to go from right about this level. And, we're just trying to ballpark this. But you can see we came up just short of the 38.2%, which is almost exactly what we've done here in the US so far. We did close weak in that last hour in Germany. And even though, Germany closed earlier than us, they had a similar drop in that final hour to what we had. Maybe not the same percentage, but there was a drop at the end of the day. Looking up here, you can see the key resistance levels for Fibonacci. Also a major gap resistance up here from 21.5 up to about 23. So this is going, we're getting closer and closer to an area where I would expect the EWG to roll over. As I look at the market, what I would love to see technically is a move back. I'd like to see a little bit more push to the upside. Let's hit those Fibonacci zones, then pull back, have the pullback be a little less volatile than what we have seen. So the VIX right now is remaining extremely elevated, and this is still a problem for the market. You know, when you see the market going up and the VIX is still sitting at 64, that tells me that we may not be out of the woods just yet. And, you know, when you're looking at this on an intraday, hourly basis, we've been rallying really strongly the last couple of days, and the VIX has gone from the low 50s to the low 60s in the last 2 days. So the VIX has been going up, telling me that the fear is actually rising while the market's been bouncing. That is a warning sign. The VIX should be coming down. In almost every period of history, you see the VIX falling when any kind of a bounce occurs. And, you know, we did see the VIX, it got to an extreme level. So the market, you know, we were starting to see the fear drop a little bit. And I even mentioned it to the members maybe 2 or 3 days ago in my daily market report. And I said, you know, the VIX is coming down. The market's still at it near its low. This could be a short-term signal on the bullish side. And that's what it turned out to be. But now I'm seeing the opposite. Market's bouncing back, but the fear's not subsiding. You know, we're getting a rally, and after a rally of 15% on the Dow Jones, the VIX is still in the 60s. Really unprecedented. Okay, let's move on to earnings spotlight. And just wanted to go over a couple of charts here. First up is Micron. And while we're doing this, why don't we take a quick look, just see where our futures are. Spider, down 2%. So things have picked up a little bit to the downside. The QQQ down 1.5%. But Micron reported, so I really wanted to see what Micron is doing. So Micron right now is up 3.6%. It's up $1.50. And how does that translate on the chart? Well, it translates to about the 20-day moving average. So if the market struggles, my guess is Micron's going to struggle as well after the open. If it does manage to get through the 20-day moving average, perhaps we could take a look up here into this gap resistance zone. I think 48, 48 and a quarter, 48 and a half would be very difficult for Micron if, in fact, the market continues its rally. But first up is, looks like we're going to get a little bit of a gap up. Let's see if we can negotiate the 20-day moving average, which is where we failed yesterday. Another big filled candle where we close below the open would be bearish in my view. Just a couple of other smaller companies, but these 3 companies missed their earnings expectations. So first is H.B. Fuller. Let's see what the numbers are here. Now it's not showing a pre-market. On the chart itself, again, if it were to bounce, and I don't know what I can't imagine their guidance was very strong, but they did miss on the bottom line, 34 cents versus 35. By the way, Micron beat 45 cents versus 38. So they did come in with a good number, but that was last quarter. Honestly, I'm an earnings-driven technician. I like to know what's going on with earnings. I mean, I'm also, you know, fundamental in my approach to the market. I don't care what happened last quarter at this point. This market doesn't care what happened last quarter. So much has changed. It's all about how you're going to get through the next quarter and beyond. And really, even just the next quarter, I think right now is on most folks' minds. So we'll have to kind of keep that in mind as we move forward. ERJ, Embraer Aircraft, huge move down. Of course, airlines have struggled. So a company like this is going to struggle right along with it. Big rally, but I really believe that $10 level, if we were to get there, is going to be tough. Off of the huge gap down, massive volume, the reaction high was just above 10, and that's where the 20-day is. ERJ came in with a loss of 51 cents. Market was expecting 17 cents. Let's see if there was any reaction here. Not seeing anything. Next one up is Worthington. So let me see if we've got a price reaction here. No, we do not. But let's look at the chart. And maybe if I type it in right, it would work better. Okay, so Worthington came up short on its earnings, 64 cents versus 68. You can see the big move down. And again, I've kind of shifted my focus to the accumulation distribution. Many stocks have been going down and seeing their accumulation distribution going up. I tend, if I'm going to trade on the long side, to stick with those companies. Worthington has been going down, but so has its accumulation distribution. So a lot more filled candles telling me that there's more distribution taking place in this stock than in many others. I would avoid Worthington. I think that there's too much risk in a stock like this. Okay, later today, we do have Lululemon reporting. So after the bell, that's going to be one to keep an eye on. Also, KB Homes, a home builder, will be reporting. Let's see. Next up, as far as upgrades and downgrades, I'm not going to go through the charts, but a couple of stocks upgraded. Ambarella, AMBA, DHR, which is Danaher, upgraded. ServiceNow, upgraded. Cisco, the food company, SYY, upgraded. Wells Fargo, upgraded. Downgrades, BYND. Actually, on the BYND, let's take a look at that chart. It did get up and hit that 20-day, also hit price resistance. This is one that I would certainly expect is going to roll over. So the downgrade at this point is probably something I would get behind, unless we can break above 80 and close there. Expedia and Huntsman also downgraded. Not many downgrades today, I will say that. There weren't a whole lot of downgrades. Okay, let's wrap up the show with the 3 you must see, and I am going to start with, I looked at the best performing stocks in the NASDAQ, the S&P 500, and the Dow Jones over the last 30 days. And so I'm going to bring those up so you can take a look at what they look like. Citrix Systems, this was actually the best performing stock on both the NASDAQ and the S&P 500. So it's in both of the indexes, and it was the best. But I'm pulling it up here to show you, just a week ago, we were breaking out to new highs. So there are pockets of strength out there that we should be looking for. And, maybe it's a change, a paradigm shift based on what's taking place. A lot more people working from home. Citrix Systems is a company that looks to me technically to be one that's being heavily accumulated. Look at the volume, look at the accumulation distribution. Much better. We're actually breaking out along with the breakout and price high. I think that's very bullish. So CTXS, one to keep on your radar. And it looks like every time we have a big down day early in the day, we get a recovery. And so if you see CTXS getting hit early on, maybe it moves down close to the prior lows. That might be a time to try to day trade it. And when I say day trade, I mean literally day trade. Get out by the end of the day, because I don't like holding some of these stocks overnight. Next up, so the S&P 500, already gave it away. Citrix is number 1. So number 2, I'm going to give you on the S&P. This one surprised me, Cabot Oil and Gas. So look at the volume coming in, big move here. Look at the accumulation distribution. We backed off here recently, especially with these 3 big down days. But we had moved to about a 7 or 8 month high when we went back up and tested these highs. So pretty good action there. We're bouncing off the recent low. $13 is your key price support for sure. But COG, I think, looks very interesting in this space. And then finally, going to the Dow. And by the way, runner-ups for the NASDAQ was JD.com, ticker symbol JD. Runner-up for the S&P, which is actually third because CTXS first, COG second. Third is UPS. And then the final stock I have for you is Walmart. Walmart, best performer in the Dow, big move up. Look at the accumulation distribution. As it gets closer to low 100s, this one looks pretty good. All right, that is it. It is a wrap for today. Be safe out there again today, and we'll be back next week. Happy trading.
Hey guys, Grayson Rose here with StockCharts.com. Thank you so much for watching. I hope you enjoyed this video. Remember, if you did, give us a like down below, leave us a comment. We'd love to hear from you. And most importantly, don't forget to subscribe to our YouTube channel for daily content from an incredible collection of technical analysts and financial minds. We'll see you back here very soon. Happy charting, my friends.